Seems like this weekend and as we opened up Sunday night into this morning, the concern about a possible Russian oil embargo is what's got priced
up last night and pretty vicious rip higher in a lot of commodities, not just crude oil, even the energy space in general, gasoline. But they're all coming off pretty sharply. I mean, crude's about $10 off its high, gasoline 25 cents off its high. A lot of volatility out there, and the only thing I can really say to your viewers is do not chase things around. Stick to your game plan.
I like that. That's good advice. Can you talk to us a little bit about how you advise your traders approach trading conditions such as these? Again, you talk about a nice move off the highs coming off, but again, we're still holding up above $100 in crude oil. Anytime you see that, it's going to have traders' tensions, emotions on the edge of your seat, simply put.
Absolutely. I mean, you just got to kind of black it out here. Just wear blinders to what's going on in some ways. Avoid FOMO. Here's the thing. Are you positioned in it already, or are you chasing it higher? If you have some good positions and you've been in this thing for quite a while, it makes sense to just know where your tap outs are on pullbacks. For us, we're not putting new futures positions on. I don't see any value in chasing things around. I've been on your show for over a year now saying crude oil is going to be, hitting $100, and that was at that point, I think crude was below $50. And I mean, we're very overweight in energy space. We're very overweight in the mining, metals and mining in our wealth portfolios, and gives us good exposure there. We're just sticking to our game plan when it comes to futures. I mean, we have what we feel a very good strategy for the long run that can systematically make money. We don't need to, push these positions higher or just ride big waves of a lot of volatility, because when these things come off, it's going to be vicious. It's going to be a vicious move. I mean, we could see crude finish today at 110. I wouldn't be surprised to see it back at 130. I mean, who knows at this point?
Talk to us a little bit about the impact this has on the consumers. Ultimately, we equate this to higher prices at the pump, and I think for the most part, we all probably experienced that a little bit this weekend.
Yeah, I think there's definitely some gasoline pumps out there. Some places charging well over $4.50. $5 gasoline is going to come. I mean, be ready for it. It could be here this week. Could be here in the coming weeks or months. But you'll probably see it, and it's going to be sticky. Even if crude oil does pull back and we see $90 crude oil, by June, you're still going to see $4.50 to $5.50 on the pump through until the kids go back to school. So in September, that's what's going to happen, and that's going to squeeze the pockets. Now, I mean, look back at 2007 run up through 2008 and crude oil, $150. We could see $150. We could see $200. It's going to be vicious. It's going to be vicious swings out there. But what happens when crude moves that high and gasoline prices go up that high? A recession becomes very, very likely. So it's going to be really interesting to see what the Fed does and how they navigate through this, and how Washington navigates through this too. But I mean, this didn't start with Russia-Ukraine. It started with many policy errors over the last couple of years.
Yeah, you mentioned the possibility of a recession. I guess that's what my next question was in terms of the impact on the consumer. Ultimately, we talk about the bigger picture impact that it could have on the economy, not only here in the U.S., but globally as well.
Yeah, I'll quote somebody. I saw this. I thought it was a great quote, so I'm not going to steal it. Jim Bianco out there puts out great stuff, Bianco Research, I believe it is. And he sent a tweet out last week. That not all, but with crude oil rallies 50%, it's been a recession follows, I think, 100% of the time, if I am recording that right. I think that's something to really pay attention to here. We have this massive rise in crude oil. I maybe don't look at crude oil from where it was, negative or $20 in the pandemic, but look where it was previously, and look at it being around that $50 mark coming into the pandemic. I mean, being above $100 is a price shock to many. So it's going to be very interesting how Washington navigates through this and how the Fed does, because the Fed's their job is going to be much harder now navigating the inflation. Now, on the positive side of things, this is if this proves to be more near term and it consolidates between this month and next month at these levels, and it comes in, inflation through June through August of last year, CPI was average 4.3%. So we're seeing 7% inflation right now, but that's because Q1 of last year inflation averaged 1.4% in CPI, core CPI. So there's higher base numbers that we're going to look at this against, and I think if we see 7% inflation this summer, that's going to be a really big issue. But right now, just kind of averaging what we're seeing in the crude and some of these costs, I don't think it's going to percolate into a 7% inflation quite yet, unless it sticks around. But at the end of the day, life runs on energy, and that's something to really not really not ignore here, and really focus on, because with crude up here, so many products in your life on a daily basis come from petroleum, and we can't ignore that.
Yeah, life runs on energy, which is why we're feeling the pinch. But there's also other products. I mean, if this was just an energy isolated incident, we weren't necessarily seeing the ripple effect in, well, commodities across the board, then that would be one discussion. But Bill, we've got a situation. We've got palladium, aluminum to new all-time highs. We're talking about wheat, which is spiking. And this energy situation here, it's a crisis in Europe. Europe's natural gas, their benchmark, soaring 123% last week. I mean, again, this is a widespread. The ripple effect here is wide-reaching.
Absolutely, and I mean, everybody's talking about the shift from to EVs but guess what goes into that? The metals. I mean, look at the metals are doing right now, and that trickles down to palladium's move is into the chips, and platinum's move as well. And how's that going to impact the vehicles? How is that going to impact a lot of things? I mean, so yeah, you're right. There's a big move here in commodities, food costs, the input costs. It's going to be a tough one to really navigate through. So the question is, does it last for the next month, or are these prices here, and they stick for the next few months? That's what we're going to have to wait and see here. But as the Fed navigates it, if CPI this week, and they can only face the tasks at hand, know that this inflation is here now. What is CPI they look at this week, and they're going to take that into account to the meeting. I would imagine they're going to hike 25 basis points. And what is their messaging? And I think that's going to be something that, do they turn a little less hawkish, or do they have to ramp up over the coming months in order to fight this inflation? So right now, I think there's a lot of negativity in risk assets, meaning equities. I think there's definitely a reason to think coming out of the weekend, and if there's any little bit of positive good news, we could see the stock market rally pretty good here. So that's something I'm keeping a close eye on.
Bill, lastly, do you see any relief on the supply side of things?
Yeah, I mean, it really matters here how quick this situation can be resolved. I mean, is this conflict really going to turn into a long drawn out war? Are we going to have to put an embargo on Russian oil? I mean, many countries in Europe import 50% of their energy to 100% of their energy from Russia. Again, these were policy mistakes that were well in place well before this war, and it's something that I think it's going to affect the supply side. I mean, however, there's the demand is robust still. I mean, look, last week, Chinese manufacturing beat expectations. The People's Bank of China, they said they're going to support the economy, and you obviously hear new cases in China right now. I mean, it's just going to be a lot of news you really got to pay attention to, and it's a very interesting market. These are very interesting times, and stay nimble. It's really the only advice I can say is stay nimble and be patient for your levels.